Welcome to the Financial Beast Podcast, the practice owner's guide to maximize practice value and create personal financial success. Your host, Eric Miller, is the co-owner and chief advisor at Econologics Financial Advisors. He is also a national speaker and published author in financial matters focused on practice owners at every phase of ownership.
Welcome, everyone, to the Financial Beast Podcast. I'm going to be your host today, Eric Miller, and I'm with an old friend of mine, old advisor.
Yep, Eric Gersch,
who was popular for the Between Two Eric videos that we used to do on YouTube. So, welcome back.
Disappeared for a while. I'm back.
I'm glad you're back right now. So this podcast is definitely dedicated towards private practice owners and really all things financial, I think you would say. Yeah,
absolutely.
Anything financial. So what we're trying to do is really two things. Number one, make sure that you are improving the value of your biggest investment, which of course is your practice.
Yep.
And then also making sure that the benefits and the value of that practice translates to personal financial succce.
Yep. To the household
and all of the strategies in place to be able to do that. But today we picked an interesting topic. And by the way, make sure that you like and subscribe because, we need more people.
Oh yeah.
To listen to this.
Absolutely.
But today I thought we would talk about, I think is a topic that we get all the time.
Yes.
When we're talking with practice owners, and it has to do with the delegation of your finances.
Giving up the reins.
Definitely giving up the reins. But just like, okay. And we start with this because we've all heard the mountain of stories of practice owners getting ripped off.
Oh yeah.
What's your favorite one?
Well, I would say my favorite one, a couple of years ago, had a client. She was in a partnership, 50-50.
Yep.
Okay.
So she had a partner.
Yep.
Okay.
Now the partner, non-practitioner, but handled all the office stuff, the money stuff, all the finances. Well, they would take draws for taxes. Quarterly taxes, right? Everybody pays them. Well, those draws that were supposed to go to taxes did not go to taxes.
Where did that money go, Eric?
Right to the partner's house. And this went on for a little bit over 2 years before she caught on to it. Now, the taxes were just the tip of the iceberg. I mean, she was, taking money for everything, just willy-nilly right out of the checking account. And it was a complete mess to unwind it.
What was the end damage?
Oh, it was, don't quote me on this, but I'm pretty sure it was over $200,000.
$200,000.
Penalties, interest, late taxes. Plus you got to take the partner to court. You got to dissolve the partnership. It was,
all of that. All of that.
All in.
Yeah. So I guess trying to think of my worst story. I remember when I first started consulting practice owners, I heard there was a practice owner that had a manager, one of their managers that, for the equipment that they buy, they get rebates back in some form or fashion.
Yep.
And what would happen is that the practice manager would actually get the cash rebates back, but they get the rebates back and cash them and never record that and just keep the money.
Yep.
And just keep the money. Look, if you're criminally inclined, they're very creative when it comes to that.
They are creative, but in every case that I've seen over the last 5-6 years, it's been pretty easily catchable if somebody had just spent 10 minutes looking.
Which I think goes to, the number one point that we want to get across today is you cannot not pay attention to your finance lines.
Totally agree. You can delegate, but you have to be like the final signature, the last one to sign off. You still have to review.
Yeah. And when you see, and we get this because we deal with a lot of practice owners, we know that like the area of looking at finances and profit and loss statements and cash flow statements and balance sheets, and they're just like, oh no, I don't even want to look at that.
Yeah, it's a low priority. I mean, you're working all day, you're seeing patients, you're dealing with HR, you're dealing with customers that are never happy. There's a million and one things. So by the end of the day, looking at every transaction in the checking account or, reviewing the numbers is, who wants to do it? You want to go home.
Yeah. So that gets back to delegating then. I mean, because look, you do want a life outside of just the business.
Yes.
And, at some point in time, you do have to let go of some of these things.
Oh yeah.
Like you cannot, sit there and categorize and do every bookkeeping. I mean, you need to like trust people. But I think the characteristic behind almost every time I've seen a practice owner get ripped off was they gave financial responsibility to a financially irresponsible person.
Yeah.
And that is the genesis right there. I mean, that's the point is like you actually gave up control to someone that was not responsible in the first place.
Yes.
And then of course you're like, well, how do I know? I mean, there's indicators. I mean,
there is.
I mean, there's things that you can look at.
There is, but people can be deceiving.
They totally can. But, that doesn't stop you from having to make sure like, look, there has to be some protocols in place for when you're giving up financial control of things that you still need to see and observe to make sure like, and you can tell, I mean, there's certain metrics that you can look at that you can tell.
Yeah.
And we can probably go. So that's a good one to kind of continue on. How do you know if you're getting ripped off? Like how do you know? I think the first thing is that if you don't have any financial metrics that you're tracking in your business, like your profit margins. So if you saw a significant drop in your profit margins, that would be worth looking to inspect to see where the money's going.
Yeah. Something's probably amiss.
Yeah. Or if you're starting to see overspending occur, then that would be another indicator that something could be amiss.
And actually, a really good indicator while I'm thinking about it would be a significant increase in the amount of transactions reversed. Because that seems to be a pretty common theme in these.
Ooh, talk about that one. What do you mean?
Well, what I mean is, let's say I ring something in and then I ring it out. If I collect the customer's money in between,
yep,
it all adds up.
True.
It all adds up, but it's not right.
There's just there's 1,001 ways that a criminal mind will try to rip somebody off.
And the reason I bring that up is that's been a reoccurring theme in the couple of cases that I've had is, and pretty much all of them, besides the story about the partnership, it has had to do with somebody ringing in a transaction, collecting the money, saying bye to the customer, and then zeroing it out, reversing it.
Just pocketing the money, And it could start off as something that's insignificant, $50, $100. And when we talk about a practice that got $1 million, $2 million of cash flow going through it, it's tough to find.
Absolutely.
But that doesn't mean that you shouldn't have people inspecting the finance lines to make sure that this kind of thing isn't happening. So that being said, like, you need to create a team and you need to have protocols in place. What kind of financial, like who do you have on your financial team as a practice owner? Like give me a couple people that you think are a necessity.
Okay. Accountant.
Yeah.
You got to have someone to do your taxes. CPA.
And I would say that you would want to work with a CPA that has worked with other private practice owners.
Yeah.
Wouldn't you think?
Oh yeah. And we can give recommendations. You can go online and find them. I mean, there's accountants that brand themselves as specialists with dental clinics or veterinarian clinics or whatever it may be. But definitely an accountant / CPA, a bookkeeper.
Yeah.
That's a very important one. A lot of people try to do their bookkeeping themselves and they'll look at their financials and it doesn't at all line up with the tax returns because their way of doing things varies so greatly from the way that they're actually correctly done.
Yep.
So having a bookkeeper, that's another one.
I would say this too. and I want to kind of stick on this one. The importance of working with someone that knows your industry and has seen hundreds of profit and loss statements for let's say veterinarians.
Okay.
They've seen hundreds of them. Like us working with private practice owners, we see patterns.
Absolutely.
Right?
Yeah, it sticks out.
Yeah, you start to see things that stick out because we know like what the optimal scene would look like for a private practice owner. This much money should be spent on cost of goods sold. This much money should be spent on staff wages. This much money should be spent on legal.
Yes.
Or other things. And when you don't have someone that really understands that, they're going to look at that and say, okay, well, I guess that's just the way it is.
Yeah.
You know?
Your KPIs, your key performance indicators.
So I think it's important that, you do need a bookkeeper. Yeah, you do need a CPA, but just having someone that has done it with other practice owners is super valuable because
Agreed.
they can totally see what those things would be.
Yeah.
Yeah. And I remember another one that another advisor had talked about where another person had ripped them off. And, I think there are indicators to this. Okay. And we're going to get in, and I will talk about this a little bit because this story is fresh in my mind. When someone does something wrong, okay, there is a tendency for them to want to withdraw a little bit.
Yes.
They start to and they even get a little critical.
Yeah, they shy away because they just want to keep the attention off of themselves.
Yeah, and most people that do rip you off. I think they're trying to solve a problem somewhere else.
Yes,
maybe they had their own financial issues that they're trying to solve. Maybe who knows the number of reasons that it's happened. But I think you will start to see them withdraw a little bit. You will start to see them get overly critical. You will start to see them blame other people for certain things. So I just want to make sure, like, as you're looking at your own situation, if you have someone that is in charge of your money or is in charge of the finances, that you're in really good communication with that person, and you can kind of tell when someone is,
Yeah, it stands out.
Yeah, it definitely stands out. And I think that's an important thing too, is just to make sure that you have weekly meetings with your finance people. I think that's important as well. Because you take your attention off your money for like 2 weeks.
Oh yeah, that's all it takes.
It
doesn't take long.
It doesn't take long at all to be able to do that. But so going back to like the looking at the delegation of money, what do you think? What are some of your best owners? Think about some of your best owners.
Okay.
What do you think some of the characteristics that they have in terms of controlling money? Like,
well, they don't. I guess I would say they have their team, and it's generally a team that they've had for a number of years.
Yeah,
it's not just thrown together. And then they know they sign off at the end of the day on everything.
Yeah,
but they know what's going on without getting stuck in the micromanagement of the fine details.
Yeah,
I know that's very broad. I don't know.
It's good.
I don't know how to zero in on.
No, I think it's good. I think when you start right as an executive, certainly you would know how to do the actions, but you're just not doing the actions.
Yes.
Okay. And you of course would want to make sure that the people that are doing it are reporting to you, and they have certain statistics like, okay, how much is in the checking account this week? How much is in this? Did we have any big bills that got sent out that we didn't, that may, give an explanation, and just ask questions.
Yeah.
I think
pretty basic.
I think that's the biggest thing, is just ask questions on things that got spent, or because we do know that the organization will try to spend everything that it makes.
Yes.
And if you allow it, and that's a theme that we've talked about for, a long time. But, you have to have someone be in control of the money. Now, being in control of the money, to your point, doesn't mean that you have to micromanage and do all the activities of it.
No.
You just have to have an ideal scene of what the finances should look like. So let's talk about that. What ideally an ideal financial scene for a private practice? I'll start with a couple.
Okay.
So number one, your profit margins would be at a certain level every single year. Okay. So profit margins would be, 20, 25%, depending on the industry that you're in.
Yeah, it's going to vary, but
I definitely think that would be a good one. Another part of an optimum scene for your finances. How about like a purchase order system? You know what I mean by that? Purchase order system? Yeah.
Yeah.
So that would be something like, so to your point, you said you had to sign off on.
Yeah, there's with a purchase order system, there's a paper trail.
Yeah. So purchase order system is basically if there's a purchase that's going to be a certain size, who has to, the owner has to sign off on that. Okay. So yeah, we want, $5,000 for blank. Okay. So there's something in place. So it makes it difficult.
Oh yeah.
For the money.
That should have to go through the owner at that point.
Yeah, I would think so. Cause if you don't, then people just, hey, that looks good. Hey, let's get this. Let's get that. So what else would you think an ideal financial scene would look like for a practice? What are some other things that you think would be in place?
A metric to track what percentage of collections, what percentage of revenue is going towards like debt each month, so that you're not getting debt heavy and working just to pay your creditors.
Yeah. So certainly, that cost of goods sold. So there would be metrics that you'd try to keep the practice in a certain range.
Yes.
Right. So wages, cost of goods sold, benefits, legal, rent.
There's industry averages on all of these expenses that, we can provide it to clients. They can go online and find it. I mean, it's readily available information. It's not secret.
No, not at all. Not at all. So some other characteristics. So I'm thinking more of like, we talk a lot about when you have someone that is on your finance lines that is always having personal problems. Okay. That is that's a bad indicator that they should probably not be on your finance lines.
And that's kind of been another common theme in the cases I've had where clients have been ripped off, is a lot of times it's something small, seemingly small at home. So like a spouse is out of work because they're sick, and now suddenly the other spouse can't pay all the bills. So what do? They take some of the money home, something they've probably never done before.
Yeah.
But it's like they feel backed into it because of circumstances to do with their home life.
It's like that line, that morality line.
And once they cross it once,
it's like you can then push it.
A lot easier to jump it twice.
Do you have some stories about that, Mr. Gersch, that you wish to share on that? No?
Nope.
Okay. We definitely won't do that. But yeah, I mean, I get your point is like the people that I've seen get ripped off, the people that have actually done the stealing, look, they weren't evil people.
No, and most of the time they don't even set out to do that.
Yeah.
I was going to say another one of the themes in these cases that I've had is it's very oftentimes a long-term employee.
Yeah.
Because they know the systems. They know what's normal. They think they know what's going to fly under the radar.
It's true. Yeah, it's true. So it's worth inspecting some people that you've had for a long time. And look, you want to be loyal. You want to make sure that you have tenured employees, because that goes a long way.
Oh, it does.
For your practice value right there. Making sure that you have, longstanding employees, but you still have to inspect.
And I think that's right. You just hit on the issue is the longer somebody's there, the more you're just naturally used to them, the more you offload on them. And over years and years, 10 years plus, it's not that inconceivable that this person has ended up in, with easy access to the money.
Yeah.
It doesn't happen overnight.
No, it doesn't. It doesn't. We talk a lot about like being able to like give access to the checkbook and those things. And, I think it's a mistake to be able
Agreed.
to do that. I still think that you have to maintain a high level of control over the finance lines, but you have to look, you have to inspect, you have to and you have to know what you're looking at. And I think some of the indicators that we talked about, your profit margins, your business savings account. Are your checking accounts growing? I mean, that's always an indicator right there. There's there are things that you can see. And if you start to see it dip just even a little bit,
take a deeper look.
Yeah. But you can't wait.
No,
It's like, you can't wait. Don't wait like 4 months of watching your checking accounts just, dwindle down and be like, oh, you know what? I think I should probably do something about this right now.
Yeah. It should be something that, if it's going on for longer than a week,
yeah,
you're on it.
Yeah, exactly.
Tops.
Exactly. So he said something interesting too about the value, the importance of your finance lines as it relates to the value of your practice. I mean, I think it's pretty obvious that if you're not in control of the money, then it will flow everywhere. And when you want to sell your practice, because we've seen a lot of people that have had to sell their practices.
Oh yeah.
Then I can just tell you right now, the importance of making sure that these finance lines are in good shape is super important.
Yeah, they have to be in good shape and they have to be verifiable. An accountant has to be able to go back after the fact and basically prove to the buyer that the bookkeeping is accurate, the expenses are accurate,
yeah,
the inflows are accurate.
They don't mess around, do they?
No, they're going to pay, in most of these sales, the group or whoever's buying is going to pay a forensic accountant to go back through, audit the financials, and make sure that what is being presented to them is really what is.
Yeah. Have we ever encountered anything that's ever gotten caught in that case? I'm trying to remember if I have or not, but I'm sure there's been stories.
I'm sure there has.
I think I've heard of that in some physical therapy where the forensic accountants or the buying group actually looked at it and said they were doing something wrong in the billing, or they were doing something that was not correct.
Yeah.
And that just nixed the whole deal.
Wow.
So you can see that it's important, getting a forensic accounting firm, thinking about this, it probably wouldn't be a bad idea. I'm trying to think of the level of your practice that it would be worth it, but to have someone come in and actually just kind of review your books, and do a forensic accounting,
especially if you're about to sell.
Yeah.
If you're a year out, you're 62 years old, you want to slow down, you want to sell this thing.
Yeah.
Get a forensic accountant in there now to verify it so that when you do sell, that it's not going to cause a holdup.
That's a great point. And I don't know how much that even costs to do something like that.
I don't know exactly, but I'm going to guess, an educated guess, that it's probably less than 5,000.
Yeah.
It's not going to be
no
absurd,
because they're going to look at your books. They're going to look at your production reports. They're going to look at your expenses. They're going to look at everything else. And I think that would be super worth it.
Yeah.
From a peace of mind standpoint. And it's probably something that you should do maybe once every 2 years. Especially if you're growing and as you're bringing on more people.
Even every 5 years, every 2 might.
Yeah.
I don't know.
That's true. I don't know that.
Opinion's going to vary on that, but it should be done at, more free. Most people, what do? They do it once at most over their entire career.
Yeah. I know. And
if ever.
It just doesn't, you can't wait that long. You can't wait that long. So, okay. So delegation of the finances. Number one, don't give financial responsibility to financially irresponsible people. I think that's number one. Number two, make sure that you as the owner have some idea of what the numbers should look like.
Yep. Okay.
So there would be an ideal financial scene of what the practice should look like. And then that way you can detect if something is amiss. And quickly. So, you're looking at your profit margins, you're tracking your expenses, you have you're not doing all the bookkeeping actions or anything like that.
No.
But you would know that.
Yeah. Just know the generals, where it should be approximately.
Yeah. If you're looking at the people that are in charge of your finances, number one, look to see if like someone's a little bit withdrawn. They're not in good communication with you. They're having a lot of personal problems.
Yep.
These are
huge
all
indicator.
These are all indicators. And I'm not saying that people that have these things are ripping you off.
No. I mean, at some point, everybody's going to have problems at home.
Yeah.
A sick spouse. It's expected.
It's life.
But if it's usually a variety of factors on top of one another, not just, oh, my spouse hurt himself and he's out of work for 3 weeks. Like, okay, that doesn't mean that person's going to steal from you.
Yeah. I think you'd see it. It would be more of like a slow thing that would occur. And that person just continually just kind of separates and withdraws from you. You've had friends that, that they just kind of slowly withdraw from you.
Yep.
And then you find out maybe they did something destructive or something like that.
Yeah.
So that's a good indicator. So if you have someone like that, just confront them, just say, hey, look, I noticed that things aren't going really well with you. Just say, what's going on? And then of course the person that is always having personal problems, like the constant personal problem. Okay. That's definitely a bad indicator that things may not be going too well.
Yeah, I agree with that one.
And then
100%.
just the financial solvency of the business. I mean, if the business is insolvent, that would be an indicator that something is not right.
Oh yeah.
So
if you see like a big change quickly,
yep.
and you're like, okay, how does this make sense? I'm seeing the same amount of patients.
Yep.
Similar amount. I have a similar amount of staff, and suddenly I'm taking home 20% less money.
Yeah.
How?
Yeah. Where's it going?
Where is it?
Yeah. Where's it going? Where's it going? So yeah, those would all be good indicators. And then I think as an owner, making sure that you have some controls in place of the finances so that money can flow in very easily, but there's some kind of a purchase order system to make sure that it's difficult for money to leave the organization.
Yeah. And I think that brings up a good point. There should be a separation between, even if you delegate, there should be a separation of who has the capability to send money out.
Yes.
And who has the capability to basically say that the money coming in, that it equals out. Because if you control the outflows and you control confirming the outflows,
yeah,
it's not that hard.
It's going to be difficult for people to rip you off in that respect.
Yep.
And, but I don't know. I don't know what the stats on there. I know that at some point in a practice owner's life that there probably will have an instance of where someone tries to steal from them, even if it's just like medication or if it's something like that.
Oh, I would say if I had to guess, I'd say it's probably close to 20%.
Yeah.
Yeah.
Gosh, is it that high?
Yeah.
Wow.
I mean, it just is. I mean, especially when you're in an all cash business.
Yeah.
Like veterinary.
Yep. And it's probably going to happen too, as you grow. You need to be even more careful.
Yeah, because you're more dispersed. You're focused on more things. You're focused on the growth, the hiring, goes on and on and on.
And it's probably different when you had maybe 4 or 5 people in the organization. Now you got 15.
Yeah, it's a lot easier to monitor.
Yeah,
4 or 5 people.
Or you got 20, and it's like, oh my gosh. So that would just inspecting the people that are around you, and then I think the last point that we had talked about, if you're to make sure that you get full value for the business, the finance lines need to be in order, and there needs to be some demonstration of control over that.
Agree.
And making sure that you structure the finance lines, you have someone come in, a third party come in and look at all of if you get reimbursements from insurance companies, those are inspected.
Yep.
All of your the production reports, everything is in alignment so that you can say to someone, this is what the financial scene looks like in this organization.
Yeah. And it's accurate.
And it's
when
accurate.
You say that.
Yeah. And I think that would do wonders for the speed in which you could transition the practice over. and the confidence that you're going to be able to get full value for that.
Agree.
Yeah.
Agree. Because that's always one of the slower steps is the due diligence on the buyer's side.
Yes, for sure.
So if everything's in order, it's going to move quicker.
Wow.
You're going to close quicker.
Good stuff we talked about today.
Yeah.
Anything else we should cover right now when it comes to delegation? I don't know. Last thing I would always say is, like, if you have someone that's responsible for collecting money, just make sure they're not afraid to ask for money. Like, they have to be like,
It takes a special person.
yeah. Like, make sure you have a bulldog. I always do the bulldog mentality when it comes to asking for money, because you're fine. The cash flow is the lifeblood of any private practice organization. And if you don't have someone that is in charge of that has a bulldog mentality and can say no, then, you'll soon become insolvent. So I think just looking at characteristics of the kind of people you want to, that would be another one as well.
Yeah, I can think of plenty of examples where their collections go down.
Yep.
They hire a new collection person and, oh my God, there's suddenly 150,000 coming in. And then you find out that the old collection person was calling once, leaving a nice voicemail, and then writing it off.
Yeah, that's it. Like, there was no follow-up for there. Yeah. So that's definitely another. Make sure that you have people that are in charge of your finance lines or responsible for the collection of money. Like, they're super trained. They have a great viewpoint on money. They're not afraid to ask for it. And I think you would definitely see that result in higher profit margins and other wonderful things. So, okay. Well, I think that's all we're going to do for today. Thank you so much look at this. We're back at it again, between two Erics 2.0.
Feels good to be back, actually.
I
was a little unsure when you asked me, but
I did ask you like the last minute.
You did.
I did. I mean, it was like, hey, what are you doing right now? Well, I got to call in like 12 minutes. Yeah, forget about that. We're going to do a podcast. You're like, oh, okay. What are we going to talk about? I don't know yet. We'll figure it out.
We can do another one.
Yeah.
I'll come back.
Yeah, we'll definitely do this. But anyway, if you are a practice owner, make sure that you can go to our website. I know that we'll probably have some kind of download as part of this podcast that you can download. Probably have to do with finances and a finance checklist of some kind, because there are things that we want to make sure are in place. Again, our job is to make sure that you know what the ideal financial scene looks like, so that you can see where things are departing and where things are not good. So then you can look at it and correct, but you have to know what to look at and what to inspect first. So thank you very much. And we will see you guys next time on the Financial Beast podcast. Take care.
You have been listening to the Financial Beast podcast, where we talk about how to turn practice profits into personal financial wealth. For more information on how to become a financial beast and practice ownership, visit financialbeastpodcast.com. You may also want to call the office at 727-588-1540 to request more information on becoming a client, or arrange to have Eric speak at your next event. That's 727-588-1540 or financialbeastpodcast.com.